Hey guys, Will Beach here, back with the another episode just to describe how we're going to use the charts from Thinkorswim and the Robinhood platform options contracts for how we're going to work this small account with um, Apple, right? Because at $122 a share, if you were buying strictly shares and you were trying to really make some money off this, it would be pretty difficult, right? You'd be in it for the long haul to hold shares over a long period of time. But what we're trying to do is maximize a small account and grow it rapidly with Apple contracts. And I'm going to show you how I'm doing that as of lately, and how we're going to continue to grow this. So if you watched the first episode, you know that there's no trade here that I want to take. But what I'm going to go through is just kind of do a rundown. I'll find a setup, somewhere back here so I can show you how I would take the information, go to Robinhood, and place a successful trade, and then how that might play out. So what we're going to do is, I'm just going to use this for example. Okay, we were trending down. You can see we're stuck under the 50. As I described in my prior video, this really isn't the place to trade. You see it just kind of bounces and consolidates in between the 50 SMA and the 225 EMA. But once you get a full breakout close here, and then it retests and gets rejected, you know it's time for it to drop. So let's say this was the setup we had rolling into this was last Monday. Rolling into last Monday, we saw this happening. How could we have successfully made a trade on this? So I'm going to go into Robinhood here. You can see I would go into Apple. It's already on my watch list. Build a watch list if you haven't. It's easy. Okay, we're going to go into here. This is super slow loading. And right here it says trade Apple options. And because we're trading on such a tight time frame, which is hourly, and I'll show you where mostly I'll confirm on a lower time frame for the best entry. So we confirm on a higher time frame to see if it fits the same thing we're looking at, but we look at a lower time frame to find the best entry, right? So we know if there's any pullbacks before we enter. That way we can get a better price before it drops. But so we go into here. So when we're looking at this tight time frame, in order to purchase something cheap enough that still isn't too risky, you have to kind of be in within a week or two. So like for instance, we're going into this week where December 11th, Friday, is when this would expire. Okay. So with that being said, we're going to look at 11th or 18th, and obviously this is in the past, so we don't have the December 4th close, but this is what it would look like if we were looking into the future here. So we would go into this one, and we're looking for a price that fits our portfolio value, that makes sense, that's as close to the price right now. If you go too far out of the money, it just won't make sense, because you only have 5 days for it to achieve that price to make it worthwhile for somebody else to purchase your contract. So with that being said, if the price is right in the middle, 122.12, and I have, you saw $150, now it's on call, so I'm gonna, I would go to puts because we're looking for it to go down, right? We're looking for it to sell off at 122.12, and I have $150. Obviously I can't purchase at 122. It's still $177 to make that purchase. So 121 is only $1 off from its current price value. And as you know, Apple moves multiple dollars in a single day. So if we knew leading into that day that we were going to have a sell-off, I would be looking to get this price at 133. So one contract would cost me $133, right? When we open that contract up, we know that the there's the Greeks, and I don't focus on all the Greeks because I'm just looking at my technicals and what I anticipate to happen. The only thing we can kind of look at is delta, right? Delta moves at 38 cents to the dollar. So that means, in theory, if this dropped another dollar, I should make roughly $40. That's a perfect scenario to get right to your price range. Now, delta goes up as it gets closer to your price and you have enough time. So, in a sense, that price would keep going up, like 0.4, 0.45, 0.5, right? And that's to the movement of $1 of Apple. So initially, if we knew there was going to be a sell-off and we knew that we were only moving at 38, 39 cents to the dollar, and we start moving in the right direction and we get 50 cents, right, in the downward position, 60 cents in the downward position, that means I'm looking at making anywhere from $15 to $20. Well, if I spent 133 and I made 15 or 20, that's a pretty significant percentage gain on a small account. We don't want to be greedy. We don't have enough time to be greedy. Okay, we're playing a very short time period. I think that's something that you have to realize, is you don't have the time to be greedy, which means you have to take that profit off the table, and then if it kept going, okay, you can't beat yourself up about leaving 50 bucks on the table or 100 bucks on the table. That's just not how this game works. You have to take the money off the table when it's there, and you have to be happy with it, and then you have to reanalyze your charts and wait for the next setup. So essentially what we're doing is we're going to look for 2 to 3 setups in a single week, and as we get towards the end of the week, Thursday, Friday, I really don't want to hold anything over the weekend, so Fridays aren't necessarily a trade I want to make unless it's a perfect setup leading, but too much can happen over the weekend. But say we get Thursday, I'm going to look to purchase the following Friday's contract, not that next day's contract, or else you could really mess up very quickly. So we're going to look for 1 week out, 1 to 2 weeks out always from your purchase, okay? The way options contracts is they always fall on Fridays, okay? So I would make that purchase and I would look for that $15 to $20 gain. How did I do that math? Because we're moving at almost 40 cents to the dollar. So at 50 cents of movement in the right direction, we should be roughly half of that, which would be about 20 bucks. That's what we're looking for. That's how we're doing it. So that's how I'm going to analyze my chart setup. And you could see, right, that this setup would have, within 2 hours would have produced $3, right? So essentially you would have been in the money, and you would have been, you could have made a really quite a lot of money on a complete fall like this. But there's no way for you to know how far it's going to go, which is why you take money when it's offered to you. Okay, so how would we use a smaller time scale to know whether our entry was going to be good or not? So that was on Monday. I only have it set to Tuesday, so you can see it was already just 1 day after, right? So that drop did not last, which is why you have to take profit off the table. If you would have left it, it would have been recovering, and you would have been stuck. So if we go back, let me see if I can go back a little bit further. On my 10-minute, let's see if we just edit it and go back. We'll go back 10 days. Okay. Let's try this again. Alright, so if we went back, that was right here where the sell-off happened. So the hourly was showing that almost the same exact setup as this. So we knew rolling into open that this was going to fall. Now, in theory, that was a good setup for it to fall, but not with momentum. But you can see here that on this 10-minute, if you would have waited 10, 20, 30, 40, 50 minutes into the open, you would have known that it was going to continue down because the strong trend was already down, but you would have missed $1.40 in movement, but you would have gained confidence and another $1.50, $1.60, $1.80 at the very peak, $2.30, which we obviously don't, I don't count on that because it usually happens fast. So let's say you actually sold when you saw, this transition happen maybe here, so $1.40. So you would have given up $1.40, but you would have made $1.40. The problem is here is that your contract would have cost a lot more because of the movement was already in the downside. So what are we trying to do? We're trying to catch the sell-off before it happens. So what we do is we look at stuff at night, maybe 3 o'clock, right before you can get a good gauge on what the day's going to do for tomorrow. And then if not, you have to catch it right in the morning, which you can see you would have had one, it would have been down, it would have popped, and you would have had a good entry here to know that it got rejected again right here, rejected for a second time, consolidate, and then fall. Excuse me, got a little sinus stuff going on. So with that being said, guys, that's how we're going to take this small account and grow it using these Apple contracts. If you're not comfortable with Apple contracts and you just want to play very small scale with Robinhood, you can only go long, you can't go short unless you're using options contracts in which you can buy calls for long and puts for short. If you're not comfortable with that and you just want to take long positions, you can absolutely wait for it. But most of the time, you're looking at making $1 or $2 per share. If you had only $122 in your account and you're looking to make $1 per share, not only are you going to use a day trade to which your account can only handle 3 per 5 days, but you're only going to make $1 a day. So, is that a bad thing? No, but that means essentially you're looking at making $3 a week. It's not the worst thing, because anything that's basically probably over 1% a week, it's actually not bad. That's pretty significant, but in a small account, obviously it just doesn't show that it's significant. So we're going to do our best to do these contracts, and I'll let you know what I see, what I'm looking for. Even currently, I said we're in consolidation. This is showing that, right? Same thing. It's kind of in that dead zone. Now it's just from the bottom top, right? So on the hourly, what we're looking at, it's stuck on the top side. On the 10-minute, it's stuck on the bottom side, so it's still in between here and here. So the move is not clear. What I anticipate is that it wants to continue long, but we'll see what happens. I don't take the position based on just a guess. I wait for my confirmations, and this is why we're riding the top of these Bollinger Bands on the daily chart, but we do not have momentum. So whenever we're on these tops, it usually rolls over, wants to find support, and then keeps going. But that's what we have to determine as it happens, not trying to guess before, because guessing is what gets you in a lot of trouble. So we're going to wait for confirmations. Hope this helps. Hope to see you guys on the next one. Don't forget to subscribe and like. Share this. We're going to be rolling out the same. I'm going to tell you what I'm looking at, so therefore we can make similar trades, and it's all for free. So spread the word.